Hey, everybody. Welcome back to episode number 43 of the Real Deal Pod with Allister and Geoff. It is I wanted to say a sunny, warm, and balmy day, but I can't do it. It is a chilly Wednesday afternoon. But before we get started, I just wanted to kick it off by making sure that every single one of you and your families have been safe. I hope you guys have been shoveled out if you've been snowed in. But for right now, grab your cup of hot chocolate, grab your blanket, cozy up with Geoff and I, because I think we got a great pod for you guys today. I'm excited, as always, to have Geoff Lee, my main man, back here with me. Geoff, buddy, how you doing? You staying warm, man?
I'm doing well. This is reminding me of my Kamloops days when my 1970 Mustang had no heat in the car, and we would have to roll around winter days with all our windows open so we wouldn't fog up. So yeah, it's chilly out there.
Man, so I'm getting made fun of by my family, by my friends, everybody back in Winnipeg, because they've all said I'm a win. Because I'm telling them all, listen, I am no longer from Winnipeg, Manitoba. As much as I like to tell people I am, my body's not, because I am not built for this cold. It is cold, man. Even though I still go outside for a walk and stuff like that, I'm out there thinking to myself, why am I doing this? This is crazy. Just wait. But I did look at the forecast for the next 45 days. We're not supposed to hit double digits till March 19th.
Oh, really?
Yeah. March 19th is when we're supposed to hit double digits again. So I figured, man, just tough it out, because I got about a month before I can start walking, or before it gets warm again is what I mean.
Yeah, I walk my mini Aussie Shepherd Louis every morning at around, I'm gonna say between 6 and 6:30, and it's dark, it's cold, but nothing wakes you up quicker than a good shot of winter frost in your face. So
Right? Oh, and then at the same time as we're enjoying this cold, my family is out on a cruise. They left they left yesterday. Yes, they did. I was up at 4:45 in the morning getting them to the airport. Sorry, it's a reason why I'm still sleepy. They landed. They are currently in Disney World.
nice.
For the next few days, and then they are off through on a cruise through the Eastern Caribbean, while I get to stay here in the cold and work. So I just thought I'd throw that out there, not to get any sympathy, but yes, to get a little bit of sympathy. And nobody else is going to give it to me. They're gone on a cruise.
Yeah. But hey, they're coming back heavier than you are. So you know what? That's looking at something half full versus half
Half full? Yeah, I'll say that. Right. All right, man, let's get into it, because like I said, I think we've got a great pod today. And I'm kicking off because Geoff, I want to start off with positivity, right? We got so many crazy things going on, tariff nonsense. My man Ford getting caught on the hot mic saying he can't work with people, and then having the backpedal saying, I can work with people. Listen, Ford, I'm with you, man. There is some people on the playground you just can't work with, and at the end of the day, you have to treat them as such. So no need to apologize, my man. You just tell it how it is. But anyways, with that being said, I have a great did you know for you, Geoff.
Yeah.
Did you know, Geoff?
I want to preface these did you knows. I don't even know what we're talking about.
No, he does not.
So I'm caught off guard with the did you knows, or I'm looking forward to them as well. So
this one is hitting Geoff, because Geoff, I actually think this one you're gonna love. Did you know, Geoff, that Revelstoke, a long known hidden gem in our lovely province, is stepping into the global spotlight as one of the most exciting emerging ski destinations in North America?
wow. Yeah.
Yeah, man.
I did not know that.
Sorry, go ahead.
I've heard Revelstoke is a fantastic place to ski. I've heard that it's not a huge mountain, but it's a great mountain. and the snow up there when it hits, it's fantastic.
Well, so there you go. So as you know, then often compared to Whistler and Banff, this once modest mountain town is undergoing a major transformation fueled by strategic investments in infrastructure, real estate, and tourism, my man.
Hey, maybe a good
So,
place for you to invest.
no, listen, this is crazy, like what's going on out here. So, first, I just wanted to start off by saying that Revelstoke already boasts North America's longest lift accessed vertical descent.
Yeah.
It is 1,713 meters.
Yeah.
So, for all of you skiers out there, Jeff, I have a question for you. What's wrong with you people? Like, are you crazy? Like, that is ridiculous.
Yeah, there is some terrain that is ridiculous. Yeah, Whistler has a run called the Coulier, which is the 10th steepest run in the world. And what I know of Revelstoke, never skied Revelstoke, would love to ski Revelstoke, but it's one of the most it's one of those mountains that has a lot of vertical. It really is a great mountain for advanced skiers. And if you really want to test your limits, Revelstoke is the place to go.
Well, it is because they've now added high-speed chairlifts, right? Luxury resorts and hotels, and now exclusive residential developments. Like they've got Mackenzie Village, where they already had to plan to add 1,000 new homes.
Okay.
Because of rising demand there.
Wow. Yeah, I believe it.
Yeah, man, it's crazy. It's crazy. So I remember Revelstoke. So a little story coming back from when I moved here from Winnipeg. So I'm moving here from Winnipeg for a job in my past life here. And I'm driving here. It's November. And I'm coming in and I'm driving from Winnipeg and I'm driving through a snowstorm. And I'm coming through Revelstoke. And it's just coming down and there's a yield. And I'm in a little Mitsubishi Lancer. So I'm driving and I'm like, oh my goodness, the snow is so bad that if I stop right now, I'm going to get stuck. I have to continue through this yield. Well, as I'm continuing to just push it and just floor it through this yield so I don't get stuck, what I see is a semi-trailer coming. And I was like, oh my God, too late to stop. Too late to get stuck. Gotta go. And I pinned it and I ranked the wheel, pulled on my e-brake, dropped it, and I swear I just edged in front of that semi and was able to continue the slide going forward, not get stuck. I then decided to stop and pull in the Best Western, a lovely Best Western in Revelstoke, I might add, and I said, time to stop and get some sleep for the night. So they took care of me with an accommodations. Lovely people.
Yeah, those highways can be a scary, scary mess.
Ridiculous, but hats off to Revelstoke because that's some amazing stuff that they're doing out there. And as they've been saying, like it's a place where if you are an investor, it is actually a place to start looking into. With those 1,000 homes being added to Mackenzie Village and luxury resorts and all those sort of things. I just thought, Jeff, as a skier, you've never been out there, might be a place to go check out. I am not a skier because there's no way you're getting me to go down 1,713 meters steep. Like, again, that is crazy, folks. Be safe. Be safe. That's not safe.
One of the things on my bucket list is to go caterpillar skiing up in Revelstoke. So
okay, well, hold on. You got to tell me what that is because I don't know what caterpillar skiing is.
So caterpillar is a cat track, which is a big machine with snow tracks that basically bring you up to remote parts of the mountain, and you just ski in fresh powder all day long. So,
okay, that sounds pretty neat. Can you get killed by an avalanche?
I don't know. Probably.
Oh man, you guys, see, that's what I'm saying. Avalanches, big vertical descents. God bless you. I mean, man, that's crazy. But hey,
I'm not that skier, so anywhere that I will go will be guided with people far more technical than I in safety and avalanche control. But I have a feeling that all that will be well managed once I decide to check that off my bucket list. I'm not going to be hiking up in the Alpine, figuring out where to go and what to do. Again, that's why it's on a bucket list, because it's expensive.
well, you'll catch me in the cabin with a hot chocolate and by the fire. That's where you can find me,
called
Jeff.
A hot toddy.
That's right. That's where you can find me, Jeff. Well, that's it. But check out Revelstoke, man, because that sounds like some exciting stuff. And yeah, I'm going to bring the family up there again just to sit in the cabin and stuff. The boy snowboard, so he can go catch powder up there. But
that's a good one. Now I know.
Right. See, now you know. Now you know. I thought that'd be a happy one, Jeff. I thought that'd be a happy one.
Well, I like it.
So what do you got for us, man?
Let me give you a couple did you knows. So this is the second week of our mortgage rule changes. Again, I don't want to go all in with discussing these rule changes. We want to do two at a time. And if you can just take one of them away each time that we talk about it, you eventually remember all the rules. But again, this is just to make sure that the knife in the box is sharp. So when you are hearing or when people are discussing this around the cooler, that you have a general understanding as far as what it's all about. And more importantly, you have the right information. It amazes me when we hear when things change as far as how many different versions there are of what those changes are. And again, when you have multiple versions of a policy or of whatever, usually it's only the one version that's correct. So again, want to clarify what these mortgage rules are. I want to recap what we talked about last pod, and again, not too much, but just enough to keep you full.
Well, let's do it then, man.
All right. Well, I don't usually talk about rates, but I did want to jump in and talk about rates. As you know, Mr. Donald Trump was to impose a tariff policy. I believe it was February 24th, or the fact that it was the day before. And what that policy was to introduce tariffs on 25% of Canadian goods being exported to the U.S. And I believe it was 10% on oil. As we know, that got retracted for another 30 days.
Yeah, let's just pause on there. Can I just tag on to there? He's out there touting that, yeah, they backed down, that we win, that. Let's just say as it was. He was literally told to go pound sand, and what would happen to him if he did decide to go forward and to go back and rethink his plan. That is actually why they're paused. He did not win. We did not cave. Somebody actually stood up to him and told him what would happen. So there you go. So Jeff, again, go on just in case these things do actually happen, because I do actually believe that we will have tariffs to come in. I do believe that.
And again, not to go too much into that rabbit hole, but at the end of the day, I would never have believed the stuff that happened worldwide when our COVID pandemic happened. So,
yeah.
So nothing really should come to us as a surprise. Again, what this really meant to me was, what does this look like in the rate environment? Because again, on the eve of the tariffs coming into full effect, which was to be yesterday, you saw your U.S. You saw the stock market crash.
Yeah.
You saw a lot of reaction, but that reaction also can give us a little bit of wisdom moving forward and give us a little bit of insight as far as what may actually happen if these tariffs do roll into effect. Now, again, as we know, that has got delayed 30 days. And again, as we know, or as we don't know, we don't really know what that's going to look like in 30 days. So let's talk about a little bit of what that meant with rates on the eve of the announcements and what a lot of economists were talking about. Prior to, if we even go about back 8 weeks ago, there was a lot of conversation that if these tariffs were to get rolled in, what that means to cost of goods is that the cost of goods are going up. That means your cost of living is going up. What that does, that it affects inflation. And then what that could possibly mean is that the rates were going to rise, or there was going to be a rise in rates back to our COVID days because we wanted to control the inflation to 2%. What we are seeing more and what we're hearing more now is if these tariffs do come in, yes, your cost of goods are going to increase. Yes, that's going to have an immediate impact on our economy here in Canada and in the US. And now remember, with this rate, with this inflation or this tariff announcement that was going to come in, we saw the stock market crash. We saw bond yields decline up to 20 basis points, I believe, which is huge.
Yeah.
And again, remember what we've always talked about is if the bond yields go down, the US bond yields go down, that means the fixed rates are going down, right?
Right.
And if we also have a recession here in Canada because of this, again, what happens with variable rates or prime rates, those also go down because we need to stimulate the economy somehow, some way. So if these tariffs get ruled in, and again, we are 30 days out, but if we were talking about rates as of today, if those tariffs got ruled in as of yesterday as scheduled, there was very strong indication as far as fixed rates were going to be going down. And again, as far as the stimulation of the economy and what that's going to mean in Canada, that would mean that the variable rates were going to go down. So again, I'm not saying that wait until you purchase something in order to figure out what that rate is going to be or what those tariffs are going to be. I've always been a strong believer, when is the best time to buy is when you can. And when you start to time rates and when you start to time market, I always usually say you time yourself out, right?
Yes.
So again, I thought it was important just to discuss, what tariffs would mean, not necessarily like, the whole bucket of issues that will
Yeah.
if you want those, just take a look on Facebook, and I'm sure some of your Facebook friends have
Facebook, TikTok, it's inundated. Just go on there, you'll hear it all.
But I thought it was important what economists are saying, what this may do to rates. And the general consensus is that if tariffs get rolled out, just based on the eve of when they were to be rolled out, we saw U.S. bond yields drop a huge amount, which means fixed rates here in Canada would drop. And what that also means is that if tariffs are getting imposed, that is going to hit our Canadian economy hard. Talks of recession, many believe we're still in a recession, but what that then would mean is that the Bank of Canada would need to stimulate buying somehow, some way, and that would be coming in the reduction of the prime rate, which has an immediate impact on variable rates and variable rate mortgage holders. So wanted to jump into that, and if you guys have any questions on this, just reach out to Allister and I, and we can give you a little bit more insight, because this pod is only 30 to 40 minutes long, and we're already
there's not enough time to go through all of it.
But what I did want to talk about here is, again, some of the new rule changes that are rolling out here in 2025. Wanted to discuss two of them, and then I wanted to recap what the two that we discussed last week. So again, just to kind of refresh your memory as far as what was discussed last week, introduce two of the new rules that have come in, and hopefully you can walk away with at least one, maybe two, but if you're really into it, 3 or 4. But again, just to get clarification on what that looks like. So again, the ones that we want to talk about this week is going to be down payment and what that looks like. And what the other one is, and again, I've always talked about this one in all of the new rules, is 30-year amortizations and what that one looks like. So what do you want to do first? Down payment or amortizations?
Down payment, man. That's always the one that people love to hear. That's what I've been hearing about, at least from my clients recently.
Let's talk about down payment. So down payment, folks, this is what needs to be understood for insured mortgages. And when you hear that word insured, what that means is that either Canada Guarantee Sagan or CMHC is insuring that mortgage when you are basically purchasing something less than $1.5 million. And then basically the down payment on that is less than 20%. So the new rule that has changed with insured mortgages is that insured mortgages in 2024 used to be up to $1 million. That now has changed to $1.5 million. And when it comes to the down payment with insured mortgages, you can put down less than 20%. As soon as it becomes an uninsured mortgage, you now then have to put 20% down. So again, the rule that has rolled out is that insured mortgages went from a value of 1 million to 1.5 million. And that what that means is also the down payment has also gone from being less than 20%, from $1 less than a million to $1 or 1 penny less to 1.5 million. So what does that all really mean when at the end of the day, if you are buying a property for $1.5 million? Anybody want to guess?
Sorry, my math is off.
Yeah, I know. I was trying to figure it out really quickly in my mind, but my math was off as well. But let's talk about $1 million, because in 2024, if you were purchasing something for $1 million, you would have to put down 20%, right? It was a minimum down payment of 20%.
Right.
Okay. In today's new environment, if you are purchasing something for $1 million, you are now allowed to put down 5% of the first 500,000 and 10% on the remainder. So what that really means in English is that purchasing $1 million property in 2024, you had to have a down payment of 200,000.
Right.
Purchasing a property of $1 million or more today means you have to come up with a down payment of 75,000. So $125,000 less.
That is amazing. So thank you for making the math easier, because that's redonkulous. Like, that is amazing. Yeah.
There was a stat some time ago, I believe it was through CMHC, and the stat was down payment. I think it was north of 80% of down payments were coming from the bank of mom and dad.
Yeah.
And the average gift from mom and dad was $300,000 in regards to that down payment. So again, what the Bank of Canada is doing is trying to, I'm going to air quote this, trying to make the affordability easier or less impactful by lowering the down payment. And again, in 2024, if you were to buy a house $1 million or more, that down payment was a mandatory $200,000. As of today, it's $75,000. So it brings a lot more people into that space. You know, again, Vancouver, like Toronto, any kind of metro type of city.
Alberta.
So where again, like when these rules were into effect of you needed to put 20% down on anything that was 1 penny over $1 million, it really brought a lot of people out of the market, right? They weren't able to do it if they didn't have the reliance of the bank of mom and dad and helping with the down payment somehow, some way. So that again, now, if you folks are buying something that's 1 penny over 1.5 million, now it's a 20% down payment. So they moved that threshold $500,000 from 1 million to 1.5, and anything that's 1 penny less than 1.5 million, your down payment is no longer 20%. It's 5% of the first 500,000, 10% on the remainder, which has a significant impact as far as people getting into the market without relying on the bank of mom and dad, or just possibly not having that 20% down.
So I want to tell you, I just want to pause and tag on that, pardon me, Jeff. And the reason why I wanted you to start with down payment is, I believe, one of the reasons why we are seeing a lot of different markets right now becoming really busy. So we had the stats come out. I'll get into the statistics next week, but I'll tell you from my business, right? There's been areas where I've had clients when we've gone into situations where we've been in multiple offers on the property.
Right.
right? So,
which is a first, or
which
not
is a
first, but which is
not
fairly new.
fairly new, right? In terms of the environment that we've been in, right? So that shows you with those changes being made, affordability has become a lot easier now, and the market is already slowly but surely began to react to that.
Yeah.
So that's why I thought it was so important that we talk about that down payment and understand just what that meant, just what that savings meant of $125,000 in a down payment, guys. That's huge.
And this rule makes a lot of sense, right?
Yes,
This
it
is one of
does.
those rules that make a lot of sense. And
It's
again,
opened up so many British Columbia markets, sorry, opened up so many areas. Langley's affordable again to buyers. Surrey's affordable again to buyers. It's become so much easier.
yeah.
White Rock, there's so many areas.
Well, which is a nice dovetail into the other policy that was introduced, which was the introduction of 30-year amortizations for insured mortgages.
Right. Yes.
So remember, in 2024, in order to have a 30-year amortization, it required for a homeowner to have a minimum of 20% down in order to have the choice of a 30-year amortization. So back in 2024, if you only had 5% down or 10% down or 15% down, your only amortization choice was a maximum of 25 years. So there's kind of two little buckets within this amortization rule. There's one for first-time home buyers, and then there's one for non-first-time home buyers. So here's the thing, folks. If you are a first-time home buyer and you are using less than 20% down, you have the ability now to use a 30-year amortization. And what that means it increases purchase power for you, but it also decreases monthly mortgage payment, again, making your cost of living a little bit more affordable. Now, we're going to hear people out there saying, well, I don't want a 30-year amortization because my mortgage payment is going to go large amount towards the interest, less towards the principal, which is 100% true. But then this is where we start talking about the personalities of the mortgage you're getting, right?
Right.
And the utilization of your prepayment privileges, where those prepayment privileges will go 100% onto the interest, or sorry, onto the principal, and zero onto the interest. So again, you're controlling the amortization by using your prepayment privilege. The second part of this, the second bucket, is for non-first-time home buyers. Again, if you are a non-first-time home buyer, you still are able to use a 30-year amortization with less than 20% down, but it has to be on a purchase of a new build, right? And a new build is a property that is built that no one has ever lived in it, right?
They have not received an occupancy permit for it.
This does not include some remote places in British Columbia or Canada wide where somebody just hasn't lived in a property that's 10 years old and it's old, super 7. That's not a new build.
No.
New construction. Let's get a little bit more clear.
As I always say, it has not received an occupancy permit for it. Nobody's lived in it ever.
Right. And those are the two rules that I wanted to talk about again, because what the 30-year amortization does, it basically, again, increases purchase power. It lowers overall monthly mortgage payment. And again, what the down payment rule change does, it opens more doors for potential buyers to come into a high price market with less than 20% down, right? So again, the biggest confusion here is how much do you need for a down payment? Now remember, as of 2025, one penny less than 1.5 million means you have to come up with 5% of the first 500,000, 10% of the remainder, right? And then basically lowers that down payment considerably. And let's just really quickly do the math. Back in the day, a $1.5 million property required a down payment of $300,000. In today's environment, that down payment will go from $300,000 down to $125,000. So again, using the 1.5 million as an example, that's $175,000 less, right?
$175,000.
Using the $1 million example, back in the old rules, $1 million was a $200,000 down payment. In today's new down payment rules, that's a $75,000 down payment. So $125,000 difference. A significant difference.
Absolutely.
So
That
again,
makes Chilliwack look great.
Opens up the market. Now,
Yep.
again, as a first-time home buyer with the second rule that we talked about, which are 30-year amortizations, if you are a first-time home buyer and you don't have 20% down, you can now use a 30-year amortization. And again, that's going to increase your purchase power, and that's going to lower your monthly mortgage payment.
And most importantly, gets you in the market.
Gets you in the market. And again, 30-year amortizations with less than 20% down also applies to non-first-time home buyers. But again, if you are a non-first-time home buyer using less than 20% down and also living in it, again, folks, these are all the rules as if you're living in it, then you can also use a 30-year amortization if you're purchasing a new build. So again, why do these matter? It gives a lot more access to marketability or high lending areas. It does lower your monthly payment, and it also increases the affordability of new builds as well, right? So, yeah. And that's it. So
that's amazing, man.
Two rule changes for this week. Again, a gentle reminder as far as what was talked about last week. That was the removal of stress tests for when your mortgage is coming up for renewal. Now, again. Right. 86% of Canadians' mortgages are renewing by the end of 2026. What this rule change does,
coming up,
it just opens up the door for opportunity to get sharper rates outside of the lender that you're with, right?
Yeah.
What we talked about as far as a rule change last week was the refinance of primary homes that you live in it, up to 90%, right? Yeah. Remember, prior to this, it was 80%, providing that you're putting secondary suites within that home. And then again, some rules behind that is a maximum property value of $2 million, a maximum of 4 units. And again, because now this is and you're also able to use a 30-year amortization. So again, 4 rules that we now know, 2 new, 2 old. And again, we're going to keep on this train until we kind of cover them all.
But they're all amazing. 2 new, 2 old, but all amazing so far, Jeff. All amazing.
Then we give Allister a quiz and see how well he was listening.
Oh man, do I get to study first?
Of course.
This is a lot to know, man. This is amazing.
Of course.
This is amazing. All right, guys, before we end this, because I think this has been a great pod, man. We got to learn about new mortgage rules again. We got to learn about how crazy Revelstoke is getting and how amazing it's becoming. And if you're an investor, seriously, honestly, it's a good place to check out and look to picking up a couple of properties. And if you're looking to live in a place where that it is going to become the next Whistler, the next Banff, and you want to live in that type of place, then Revelstoke is an amazing place to check out. So before we end it, I want everybody to gather around real close. All right. I've been having some talks with clients. I've been getting a lot of calls from people. A lot of people are sweating and a lot of people are worried about what is going to be going on over the next little bit. They're calling me saying, Allister, what's going on with rates? They're calling me saying, Allister, what's going on with Trump? What is happening with these tariffs? What's going on, Allister? I heard you on the last pod ranting and raving about Trump. Is he this much of a crazy man as you're saying he is? The answer is yes. But the other part is, guys, he's in power for the next 4 years. All right. So this is what we've got to deal with for the next 4 years. So we cannot, guys, live in fear for the next 4 years. And what we can't also do is allow the fears of others to control our decisions. And I'm including real estate agents and I'm including mortgage brokers in that. because you're going to come across a lot of agents and a lot of mortgage brokers and just a lot of people in general that are going to provide their opinion. And what that's going to do is going to cloud what's right for you. Okay. So I want everybody to take a breath. I want everybody to take and relax. And I want everybody to just listen to Jeff and I. Because I promise you, we will be the calm. We will be the ones to help you understand that that all that matters is your journey right now. We can't predict the future. Nobody can. So if you put off your journey now, if you put it off for the next 4 years, you might have lost out on your dreams, right? Jeff was just saying we might have rates come down, and we know what happened in COVID. And I was just mentioning that I've had clients writing offers where we got into multiple offer situations because we do have markets expanding because of these new rules, right? Because affordability is expanding. The real thing that everybody needs is a runway. You need the time to be able to talk with the person you trust. I really hope it's Jeff and I, but you need to have that runway. You really need to take the time to sit and have a discussion about what your journey is and how the things that are happening right now affect your dreams today, not tomorrow, not next month, and not next year. Because we got 4 years of crazy, guys. We really do. We got 4 years of crazy. We don't know what's going to happen. This dude is unpredictable. When I say he's a crazy person, he's a true crazy person.
Some will say we've already had 8 years of crazy with our own.
Right. So and that's exactly it. Right. So, and that's what I'm saying, guys. That's why I wanted to end this pod, just with everybody to take a deep breath, just relax, come on the journey with us, just listen to us. We're always going to be the calm in the storm. We're always, like I said, we are doubling down in 2025 in delivering value. And now I'm going to say we're tripling down on that. And we're tripling down on making sure that we're not going to be the media, and we're not going to stoke this fear and this discontent and all this sort of crazy stuff. We are going to be your runway of calm. Okay. Your runway.
Yeah. And you know what? I'm gonna end this with something that I really like about Warren Buffett. And he said this, and I'm paraphrasing: when people are fearful, be greedy.
Yes.
And when people are greedy, be fearful. So we are going into a fearful, let's just keep it on real estate, a fearful mindset about real estate, because we just don't know what's going to happen. But again, be greedy, because there's lots of opportunity for you out there. And I said this in the beginning of the podcast, and I'll say it in the end. The best time to buy is when you can.
Thank you, Jeff. Amen, my brother. Amen. And with that, everybody, thank you so much for sitting with us today. I hope you guys stayed warm. I hope you guys enjoyed your hot chocolate. I hope you guys enjoyed our topics today. We always hope that you give us your comments, give us your suggestions on what you'd like to hear from us. Oh, one more thing. We've got a special guest for y'all next week. Super excited. Jeff, are we going to let them know who it is, or are we going to keep it as a surprise?
We're going to keep it as a surprise.
All right. Let's keep it as a surprise. And then we must.
Or maybe not.
All right. Jeff wants to ruin the surprise. You go ahead, Jeff.
So, Joe Toblin is from Clearpoint. He is a wealth manager there. He is going to talk to us about, what is he going to talk to us about? Some good and some fun and exciting stuff. Life insurance, why you should have it if you're real estate investing, strategies of life insurance through personal corporate things, the cons and pros of what that insurance looks like, and maybe some things that we haven't heard of before. I find Joe to be a little bit ahead of the curve. He's a very intelligent man. And again, I like most people, there's a lot of them out there, but there's only a few good ones that you should listen to. Joe is one of them.
And that's what I'm saying. We got a jam-packed episode for you guys next week. So As always, everybody, stay empowered, stay informed, and most importantly, Jeff,
stay in tune.
Stay tuned, baby. That's right. See y'all next week. Peace out.
Wow.
Bye now.